Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 10th of October 2024. So China was on a week-long public holiday, and the reopen today suggests that some of the bullish momentum that had been building in the previous days have now been lost. The big drop in Chinese shares saw European markets open lower, but they have bounced back from their earlier lows, along with US index futures. This here is the German DAX index. As you can see, it is bouncing back from support at around 18,920-ish. This area was previously resistance back in May and a few other times earlier this year, for example in August and in early September, and again in late September before the breakout happened. The index has now come back to retest this level on at least a couple of occasions, and so far is holding firm. We have the 21-day exponential moving average converging there as well. But if we see a daily close below this area, I think that would be a bearish scenario, and if so, then it could lead to a drop to at least this area around 18,500 to 18,570-ish zone, which is the previous breakout range. But we'll cross that bridge if and when we get there. For now, the most important area to watch is the shaded region on the chart at around 18,920 to around 19,000, which is a key support zone to watch now. In terms of potential resistance, well, this level was resistance I was monitoring previously, and it held yesterday. The market sold off from there, but if it gets there again, then I would expect a bullish breakout at the second time of asking. Like the German DAX index, the S&P 500 is also testing a key support area and so far holding firm around this shaded blue region, which was previously resistance back in July and again in September, before we saw the breakout in late September, and then the market has gone into a bit of consolidation, holding above this key area of support and the 21-day exponential moving average. A potential break below this key support area could trigger a short-term sell-off at least, and there are a few reasons why the markets could potentially weaken, because we have, for example, the US elections coming up. The third quarter earnings season is just a week away now, and the Fed has pushed back against expectations of further aggressive rate cuts. And let's not forget the ongoing geopolitical concerns in the Middle East, which could cause oil prices to surge higher and potentially rekindle inflation worries. So all of these factors could combine to cause a breakdown of this area of support. And if that happens, then we could see the index drop to 5,500, which is the base of the previous rally in around mid-September. Below that, we have 5,400. And then finally, the 200-day moving average is the next key support zone to watch should we get there. But we'll cross that bridge if and when we get there. For now, the key question is, will the index hold above this key support area, or will it break down? We've seen the US dollar rally in recent days, and as a result of that, gold has been consolidating inside this triangle pattern. But as you can see, at around 2,635, testing the trend of this triangle pattern. If it closes below that level, then 2,600 could be the next stop, where previously it had found some resistance. Below 2,600, there's nothing significant until the bullish trend line, which comes in at 2,530 area or thereabouts, depending on how fast or otherwise the precious metal breaks down, if it does at all. On the upside, 2,655 is the first level of resistance now. This level is more of an intraday level. You can't see it clearly on the daily time frame. It's where we also have the resistance trend of the triangle pattern coming into play. Above that, the all-time high comes in at 2,685. The hawkish repricing of US interest rates caused the euro dollar to break down last week, and so far this week we've seen some stabilization just below the 110 handle. 110 is now the lower band of this key resistance range between 110 to 110.25-ish, this shaded region. Once support, this area could turn into resistance this week, potentially leading to a fresh drop to 109, which is the next level of support, with the 200-day moving average coming in at 108.75. However, if we break back above this former support area, then that could lead to a short squeeze, potentially pushing rates to 111 or thereabouts before it decides on its next move. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.